Well, welcome back from afternoon tea for our final couple of sessions at our 2025 conference as we move to our next topic, navigating banking disruption in an uncertain world. I'm sure many of you have heard the phrase, may you live in interesting times, often quoted as a Chinese curse or perhaps a Chinese proverb. Done a little bit of deep diving. In fact, quite possibly not ever a Chinese curse or a Chinese proverb, possibly a reworking of the Chinese expression, better to be a dog in times of tranquility than a human in times of chaos. There you go. But regardless, I think we do know that we are living in a time of disruption and uncertainty. And our panel is going to help us navigate how to navigate banking in this disruptive and uncertain world. We've got Nell Hutton, who's the Chief Executive for Westpac Institutional Banking, Anthony Shaw, the CEO of HSBC in Australia, and John Kunkel is the Senior Economic Advisor at the United States Studies Centre at the University of Sydney. This panel being chaired by McKinsey's Senior Director, Lloyd. Give the panel a round of applause as they make their way to the stage. It's all yours.
Thank you, Adam, and thank you, everyone. So I know we're right after tea time and it's pretty late in the day, but I promise that I will try and get something spicy out of this panel to wake you up. So 5 months ago, when we first started thinking about the framing for this panel, Donald Trump had just taken office. As you may all recall at the time, he'd started applying some pretty sweeping changes through a series of executive orders. When we actually started talking to these three panellists today about the themes for the session a couple of months later, we'd already been through Liberation Day, the tariff pause, the White House showdown with Ukraine's leader, the US-China trade escalation, and then the initial de-escalation, and not to mention our own federal election. Since that time, we've had conflict between Israel and Iran in the Middle East. We've had the US bombing Iran's nuclear sites. We've had several more rounds of tariffs on and off. We've had a rare earth supply chain scare and more semiconductor controls on and off. So I haven't even listed close to half the things that have happened in that time. But despite all of this, the global economy is actually doing better than I think most expected when we look back to where we were at the start of this. The Economist recently called it the Teflon economy. The Economist also foresaw two big risks to that Teflon economy, which will resonate, I think, to everyone in this room, and we'll go into a bit with this panel. One is higher interest rates, increasing the cost of debt and challenging debt serviceability. And the other one was the escalation of geopolitical shocks that finally break what has been a surprisingly resilient global supply chain. So with Nell, Tony and John today, we have a pretty ideal mix of voices to help us put all of this into perspective. We'll talk a little bit about where we are, the context for Australia, for the banking industry, and how we sustain resilience amid all of this. So with that, John, I might kick off with you. There's a lot happening right now. Can you give us your summary of where we are with tariffs, with trade talks, and maybe with the beef between Trump and Albo?
Well, the beef is, I think, one of our major exports, so we'll see if that survives. But look, we're about a week away, I think, from the August 1 deadline on the sort of revised deadline for the Liberation Day, or the second round of Liberation Day tariffs. You'll have seen in the papers a flurry of deals that are still coming through. Japan most recently adding to the UK, Vietnam, Philippines, and others. A lot of speculation this morning that the EU as well. So in the period just going back to January, we've seen the average US tariff level go from about 2.5% now to something north of 15%. I suspect it'll go even higher before this settles down, if it ever settles down in a sense. Australia's not in that front rank of countries in terms of active negotiations for trying to have a deal by the 1st of August, partly because of our bilateral imbalance is actually favourable to the US. So we haven't been in that sort of long list of countries, but we do have the baseline tariff of 10%. So I think on any analysis, that is the baseline now. The fact that big players like Japan have struck something at 15 means that I don't think anyone's escaping 10%. And then you've got these sectoral tariffs on top of that as well, or in addition, I should say. So we all know about steel and aluminium, but there's a long line of sectoral investigations that the Australian government is looking at, everything from auto parts to aircraft to timber and pharmaceuticals, which is a big one. So, look, I think we will be in a world of a structurally higher US tariff rate. There's no doubt about that. It'll probably be closer to 20% than 15% by the time it finishes. And I think it's fair to say the fact that we are seeing these deals come through, I don't think President Trump will lose his love affair with the tariff anytime soon. He sees it as a personal stick he can wield to secure results. So I suspect, people who think it will settle down, good luck with that. I'm not sure it will settle down quite that much.
And maybe if I can just kind of switch to the other side of what's been going on in Washington around tariffs and trade, it's also a question around the impact on the bond market. And while I'm not going to ask you to comment on the vagaries of the bond market, if we think about this room, and we've been talking about volatility and funding costs, there is a really political aspect going on at the moment in Washington around the future of the Fed chair, Jerome Powell. What is in the mind of Trump and his team as they think through the dynamics of replacing the Fed chair now or later?
Look, I think the overriding thought in President Trump's mind is he doesn't like constraints on his power. He doesn't, I don't think he's read James Madison's Federalist Number 10 about checks and balances and all stuff like that. He basically wants the capacity to do things unconstrained, and he sees Jay Powell. Now, he's obviously got a whole series of criticisms as a former real estate magnate. He always wants low interest rates, but ultimately, I think he doesn't really want any constraints on his power, and he sees that as another lever that should be under the control of the White House.
Nell, I might switch to you. You were in the US a few months back. You met Ambassador Rudd while you were there. You said that while you were there, you thought there would be a permanent shift in conditions needed for investment. We're a few months on now. What lessons did you take away then from what's happening in the US? Does any of that change now, particularly if we think about deregulation, tariff policies, sovereign competitiveness?
Yeah, so I was in New York and Washington in the week following Liberation Day, so it was an interesting time to be over there, meeting with our US and Australian clients over there. And as you said, I also had the opportunity to meet with Ambassador Rudd in Washington. I would say general takeaway was I was surprised by how optimistic our clients were about their ability to navigate through the new policy settings. Whilst there's obviously a lot of noise and it does make things more challenging, most of them felt reasonably confident about their ability to adjust. Obviously, Ambassador Rudd was very focused on making sure Australia is well placed to manage through the volatility. And all eyes, of course, were on the bond market. As you've just pointed out, they still are today. And we had that day, a couple of days post-Liberation Day, where 10-year treasuries traded towards 5%, and people got very worried. There was one afternoon in New York where there was really just not a bid for treasuries in the market, and people were very concerned. And of course, on that afternoon, Scott Bessent intervened and convinced Trump to announce the pause on reciprocal tariffs, and that really calmed the bond market down. So one thing we know with respect to the bond market is that Trump watches the bond market. And if you see US Treasuries trading above 4.5%, he gets very concerned. And so that gives me some comfort regarding what he might do with respect to Fed Chair Powell, and also with regard to bond market concerns about the deficit, which are real concerns. But we do know that Trump understands the importance of the US Treasury market to the overall economy. And obviously investors are hanging a lot on that at the moment. But look, to bring it back to our clients, I'm still hearing from a lot of Australian companies and investors that they still see the US as a very attractive place to deploy capital. The US still has very attractive labour productivity, low energy costs, increasingly more efficient regulation. And so a lot of Australian investors still see the US as one of the most attractive places to invest in the world, despite some of the uncertainty and the potential impact to growth from new policy settings. And so, when we bring that back to Australia, one of our competitive advantages over a long time has been our relative stability and reliability as a place to deploy capital and as a place for talent to come. And that continues to be the case, and even more so in an environment where there absolutely is a premium placed on that certainty, reliability and stability. But we're going to have to work to maintain that attractiveness. And so, this national discussion on productivity, which the Prime Minister and the Treasurer are leading, I think is really important, that we are continuing to be that favoured destination for capital and talent, despite, or even more so in this more volatile global environment.
And I think the point you make about relative stability and reliability is really important. One of the things in that I also picked up from what John was saying is that as we have this kind of slew of trade agreements, particularly in this region, that have been announced, it does for businesses bring a little bit more stability into the environment, making decisions a little bit more certainty, although I kind of hesitate to say actual certainty. I mean, if we shift slightly to thinking about Australia's positioning in the region, I mean, Tony, you've just been over with the Prime Minister in China. What were your takeaways there on that, obviously that very kind of central relationship for us in the region?
Well, it was a very constructive trip and thoroughly interesting to be part of. Putting aside your comments around peak steel and our trade in our primary resources, I don't think we've really hit peak complementarity at this point in time. If you think about the shared problems that China faces, we talk a lot about their ageing population, their need for pension reform. With that comes the need for medtech, healthcare, biotech, collaboration in agriculture, which we're seeing, and a multitude of other areas, private capital and wealth, for instance, and because of their ability to need to be able to fund that ageing population. I see a great deal of opportunity, and the delegation came away with a great deal of opportunity that we can explore to enhance complementarity in that regard. If you think about yin and yang, we have, for all intensive purposes in this country, had to try and temper demand, and we even have to go to productivity commissions to try and enhance supply. In complete opposite, they have an oversupply in pretty much every sector, and they have a demand issue, and they're trying to try and ignite that. So I see a great deal of win-win. It requires rational optimism and rational realism. I think the government is setting the right tone there, and you touched upon it. Predictability is key, and as long as Australia can continue to be predictable in the way in which we want to engage capital, trade, investment with China, I see a great deal of upside in that regard. I'd put one of the things the chairman of BYD did share with us. BYD did not trade in Australia 3 years ago. Next year they'll send 65,000 cars to Australia. So who is the next BYD that we're doing a trade with?
Just maybe zooming out a little bit from China, you've also written previously about the economic relationships Australia has with India, with Southeast Asia. I mean, China is obviously very central to how we think about our economic activity in the region, but what about kind of broader in the region? The government's been making a big push on Southeast Asia. The India partnership is growing. What are the opportunities there, and what have other countries done well there?
Yeah, if we think about the miracle, which is China, at its core was it took hundreds of millions of people from poverty or low income, took them to middle income, gave them education and created a consumer base that's allowed us as a country to prosper from. And if you look at the same situation that's going on with 700 million people in ASEAN and 180 of them over the next 10 years moving from low to middle income, we've already experienced it in the education sector. And governments recognise this, and so through the commissioning of the Nicholas Moore report, the strategy towards ASEAN for 2040, he's identified 79 government objectives which have been already over 50% have been acted upon. Everything from language skills, talent transfers of uni students and the likes, the creation of landing pads in Hanoi, Jakarta, and Singapore and a couple of other places that I can't remember. But it's about taking what was, we used to do a little bit of business with them, to elevating that based upon better partner selection, better understanding and navigating the regulatory landscape. And we've got customers that used to use, for instance, Malaysia as a manufacturing hub. are now looking at Malaysia as a distribution, because there's more consumers coming online there for their product than there are in this country. And so I think this is just a simple example of what we're going to see before you even start tapping into the China +1 or the China +2 scenario post-tariffs.
And John, maybe if we think about the kind of more geostrategic lens on this as well, I mean, how do you see the Australian government's response? How's it been positioning itself between the US and China? There's been a lot of coverage of that kind of balance that the Prime Minister is having to make.
Yeah, look, I think the honest answer, it's only getting more and more complicated. There are quite a slew of articles in the Week in Australian, Paul Kelly, Greg Sherrod and others talking about, well, quoting people like Hugh White, Richard McGregor and others were saying that the Great Australian Balancing Act is sort of coming to a little bit of a threshold point. And I think that's true. I think, firstly, I mean, where credit's due, I think the Albanese government, in terms of stabilising the relationship with China, is, you know, they can really point to some economic dividends there in terms of lifting of various bans and controls. Having said that, I think it's also obvious that China recognised in their own self-interest that through that episode of coercion that overreached, so it was in their interest to also move. So I think both sides have sensibly sort of found or re-established, if you like, the sort of status quo ante of some of our trading relationships. And I think, as Tony said, like, it's obviously a big market. There's still big opportunities there. I think, though, we are in real time in balancing the US and China in terms of our messaging, in terms of our language. Now, again, I don't think you don't have to be a big fan of President Trump to recognise that the Americans are entirely legitimate in asking us about our defence capability and our preparedness. So, you know, we shouldn't be defensive about that. I think there's an awful lot that Australia has to do to get its own house in order. And so I think there is a little period of risk that we've now entered in terms of that, navigating that relationship. And I'm not saying it's you know, there's no magic wand out there. I mean, you know, unpredictability is a feature, not a bug of the Trump presidency. But I do think it's an alliance that needs active management and active maintenance. And if we're respecting the structural power of China in the system, which I think we rightly do, we also need to respect the structural power of America in the system. And we can't let our domestic politics sort of overwhelm the fact that we are where we are. These are our, you know, this is our security relationship. We're of course got to try to maximise our economic opportunities in the region, but there will be trade-offs. I mean, you look at an area like technology competition, and we've been taking steps over a long period of time with the 5G decision, critical infrastructure protection. So there has to be, I think, a continuous conversation between the government and the Australian people about strategic risk. I think the Americans will be incredibly alert if they think we're not having that conversation.
I mean, if we put aside the kind of day-to-day politics of it, and we've spoken a lot in this conference over the last couple of days about economic policy making, regulation, you've written a lot about how national security is now making its way into economic policy making and regulation. Can you unpack a little bit for the room how that's happening practically in Canberra?
Yeah, well, look, as I mentioned, it's sort of, I actually think we're about 10 years beyond a big structural break around 2015, where you had certain, you know, under Xi Jinping, certain aggressive moves in terms of the South China Sea, in terms of their technology, if you like, ascendancy in various areas. So Australia has already, I think, been taking various steps to reinforce what now is called its economic security. I think the next phase does come back in a way to firstly getting some of our best and brightest minds working on our defence capability. I actually think defence is too important to be left to the Defence Department, in my view. So I would actually encourage people in this room as well that, you know, I think we'll talk a little bit about Team Australia. There is a Team Australia element, I think, to national security, which frankly, people of our generation and haven't really had to think about too much, frankly, in the the era of deep globalisation. So I think there is a responsibility on government and on the private sector to think about how we improve our capacity. And I'm not talking about, 3%, 3.5% of GDP, but how do we turn whatever dollars there are into effective capability? Like that's the first job of the state. So we shouldn't be under any illusions that that's an issue. I do think there are opportunities for us, though. I think out of the sort of turmoil, building, what I would call economic security partnerships in the region, taking advantage of our strengths. Partly that's our political stability and the rule of law. It's also, for a lot of countries, economic security is food security and energy security. So, we've always been trusted, reliable partners on that. So I think we need to be on our toes for what the opportunities there are for an Australian economic security strategy. There are risks as well. I think business needs to be part of that continuous conversation with government about how we're managing risks and how we're grabbing the opportunities.
And now, one of the things that obviously comes up there is how we kind of tie our economic policy making into our resilience. And you touched on productivity being a key theme coming forward. We've got the Prime Minister's Economic Reform Summit coming up shortly. In that context of that Economic Reform Summit, which I think now does have multiple streams, productivity being one, how do you see Australia competing most effectively in this new era where a lot of countries are turning inwards with their economies?
Yeah, look, I think John articulated well the need for us to invest in our sovereign capability across defence, energy security, supply chain resilience, but also, for this room, banking competitiveness. Will also be an important part of that productivity story and that resilience. And importantly, our intellect and our skills, our ability to attract, develop and retain the best and brightest talent will also be really key in terms of that sovereign capability. And back to John's point around, do we have our best and brightest focused on these key challenges like defence, will be a really important part of that broader resilience and productivity story.
And I think maybe John, you touched on the Team Australia point, like Nell, Tony, like is there a Team Australia moment that will come out of this Economic Reform Summit that you're kind of positive about on the other side, or is it framed in a different way for you?
Yeah.
Please.
Yeah, sure. So look, I think the productivity discussion is the Team Australia moment, which we all need to lean into collaboratively. For Westpac, we haven't actually released our submission to the government yet. We're going to be doing that imminently, but I'm going to give you a bit of a sneak peek at a couple of the things that we're going to be really focused on. The first being the housing supply challenge. Everybody knows that is one of the biggest challenges for our community, but also for productivity. Then, of course, energy security, affordability, and how do we roll out more renewable energy faster? And then the other thing we're focused on is the opportunity for regional Australia to share more in Australia's future growth and prosperity. Those things we think are all really fundamental to lifting productivity for the nation. But of course, as I said, it's easy to talk about productivity. None of these things are going to be delivered without real collaboration between government and private sector, real genuine collaboration and commitment to delivering and implementing the outcomes.
Yeah, that's a spot on, and that collaboration, which we very much welcome, we've even heard it with regulators today, is most definitely needed. If we think about then from financial perspective, facilitating capital flows between Australia and abroad and trying to even prosper further as a nation around those deep linkages we have people to people and trade with our nearest neighbours and also new and emerging markets. From our perspective, we have the privilege of running into 59 sovereigns. And so is there a Team Australia narrative at the moment? It's in draft, whereas many others have very formulated, like if we just use two examples, we're talking about the US. US is all about FDI and inflow, come and invest and they'll do anything to see it. But if you go to Jakarta tomorrow, Every CEO of a SOE or for a private company will talk about President Pabayo's GDP target, inbound FDI, high-end and advanced manufacturing in the areas where he wants it. So creation of a narrative, I think, is key. And the second thing I think would be, from a Team Australia perspective, worth just discussing, is who's the competition here? Is the competition Australia versus Australia, or is the competition team narrative that is making sure that our goods and services are exported and trading competitively with other nations around the world? Because let's face it, in the tech era, product can go anywhere really fast. BYD wasn't here 3 years ago. And so it's really important, if we're going to start talking about a team narrative, a Team Australia narrative here, it's about promotion of the sovereign rather than elements of the sovereign.
Tony, I might just stay with you and narrow in a little bit and think about the banking sector in that context. I mean, HSBC is a very global bank. You're also the chair of the BCA's Global Engagement Committee. You said recently you're very mindful of the way that tariffs, export bans and other policy tools are being used beyond the US as countries within the region pursue domestic development as a strategic priority. And you're mindful of how we help clients navigate those conditions. How are you doing that at HSBC and to the extent that it's relevant through the BCA as well?
Well, I'll tackle that from an international perspective and then leave Nell to maybe comment from a domestic perspective. But storied history, we've been doing it for 160 years in all of these countries. And I would say to you as a starting point, and we heard it numerous times here today, you even rattled off 20 things that have happened since the 2nd of April. In everywhere where we want to do business and more of it, disruption has been the norm. Disruption is now just it's like breathing. And so I think it's really important to, if you've been doing it for 160 years in a lot of emerging or new parts of the world, you've seen wars, you've seen geopolitical events, you've seen tariffs, you've seen deglobalization, globalization, and a multitude of other factors. So it's navigating regulatory landscapes. It's using both ends of your corridor to be able to navigate the government or the regulatory, or for instance, the currency, interest rate hedging regimes. Your payments, your trade finance businesses, they're doing very well. We're seeing, we've experienced a significant uplift in the first half of the year in our global trade finance business. We're the largest trade finance business on the planet, simply because of pre-hedging. So there's a privileged position, but a responsibility a bank like HSBC has to help customers, because not many have been doing it in that sort of global footprint for 160 years. On the flip side, the BCA, it has a responsibility to its members because it has a lobby mandate. And it has the ability to go to its members, including the banking sector. So what's your biggest bugbear? Lobbying government appropriately, and in the same token, using its connections to open up opportunities in other jurisdictions. China was a classic example of that. So on the back of that trip, we're planning to put together some papers to look at special economic zones, which would allow the free flow of capital and potentially capital linkages between retail so that people could participate in this market, and so on and so forth. So it's two different lenses, but from my perspective, the responsibility is an international one. Maybe anything from a domestic viewpoint?
Yeah, sure. So, similar to HSBC domestically, Westpac has been supporting our customers and government, state and federal, in navigating disruption and change and challenge for 208 years. So I'll up your 160. And we are very focused on those areas which are critical for national resilience. We talked about energy security, defence, housing. You touched upon data and AI and our ability to compete in technology. And of course, I also mentioned regional Australia and agriculture and food production as areas which are all areas where Westpac is focused on supporting our clients and government. We think we have an important role there to play in financing, but also delivering insights and risk management solutions for our clients, and partnering with private sector clients and government on delivering those outcomes that are going to be critical to ensure that Australia's economy continues to outperform our peers globally.
And if I switch over to how regulation interplays with that in this environment, I mean, we heard John Lonsdale this morning talk about a geopolitical work program for regulation, and for most boards, geopolitical risk is flashing amber, I think you said, Tony. So how do we see the changing nature of risk management for the banking sector in that environment, with more geopolitical volatility, more regional conflicts, more requirements from the regulator on geopolitical risk? What is the pathway through for a regulation that is both enabling as well as managing risk?
Pathway through for regulation. We're trying to advocate for less. I think the most important thing that I've observed would be that geopolitical risk has been treated as an emerging risk, and I think that's a mistake. I think we have to treat it as a norm. I think it goes hand in hand with our resiliency obligations that we face as a banking sector, whether that's 230 or 234. I think it means that you have to think far more broadly about, it's no longer just about understanding what important business systems you use and where they operate, but for instance, what are the business contingency plans that your third-party providers have if they're, for instance, in a geopolitical hot zone in their own right? So there's a multitude of things to think about when it comes to geopolitical risk and stress testing. From my perspective, you've just got to keep working your scenario analysis. You've got to test and test and test. You can't afford to wait for the issue to break glass and tear envelope. And because, if we think about it, you don't get fit going for a run every Sunday. You've just got to keep on getting out there and having a trot. And it's the same with this. And it probably ties into what the regulator was suggesting this morning. You've got to have a board and a management team that are fit for purpose and current in that particular space. And so it all ties in nicely into a 230, 234 regime from a regulatory environment, but it requires much more than that. How's that, John? Is that fair?
Yeah, look, I think we can, I worry a bit, we talk about the virtues of our stability and they're real, but we also need creative destruction a bit, right? If we're going to get these productivity gains that we need. So we do need, I think, a different conversation between government and business. I mean, I put on a thing for the US Study Centre just after the election on AI, and that was just one of the biggest themes of the day, is that we just need a different conversation, a deeper conversation between government and business about capturing some of these opportunities and the strategic risk environment. I mean, I'll go back to risk in the sense that over the last few years, I think you've seen our intelligence community and parts of our, if you like, foreign policy establishment develop deeper links into the business community, deeper conversations about what's happening out there in a geopolitical sense. I think that those conversations need to be more institutionalised. They need to be, I think the days where, we do a free trade agreement and you do some consultations with the National Farmers Federation and away we go, like, we're not in that world anymore. It's actually building not just, I think, an internal geopolitical risk function into a business, it's deepening that conversation with government and getting a sense of shared understanding around some of the trade-offs that governments need to make, and therefore some of the trade-offs that businesses will have to accept as well. So I think we're a well-governed country, but I don't think we can be at all complacent. I think our governance levels, both public and private, need to step up a further notch because we're in a pretty high-risk environment.
Nell, anything you want to add?
From a regulatory perspective, I guess back on the regulatory point, I think that it's back to Australia's relative competitiveness. We absolutely need to make sure that our regulatory settings are efficient on a global scale and also tailored towards supporting investment in those critical areas that we've talked about to support national economic growth and resiliency. So, I'm pleased that that is all part of the broader productivity discussion which the government are leading.
So we've talked a lot of there about volatility as risk, as risk for clients and as also risk through regulation. But you just touched on there about how we be more enabling. I mean, John and Nell, maybe I ask both of you this, particularly given the time we've got left, but how can we see opportunity through this volatility? I think, Nell, you've talked about defence and national security themes being opportunity. John, I think you've talked about how Australia could use economic and trade diplomacy more creatively to enhance our economic security. What are the opportunities you see in this environment in taking advantage?
Sorry, John, you go.
Well, look, I do think doubling down on our strengths is an important starting point. I mean, as I said, if you're sitting in Indonesia or Vietnam, you're still worried about energy security, you're still worried about food security, and they're great Australian success stories. So I think, and to be honest, if the Americans are out there sort of eroding, in a sense, the trust of relationships, that's an opportunity. Like, let's be honest, we've got to be in there. Not that I want to see that. I mean, I like an American-led liberal order. We all would, but the world's changing, so we've got to put our national interests first and be prepared to sort of go and grab opportunities as they arise. So, I mean, I'm optimistic, but I think we haven't got an infinite window. We've sort of, there's a really good speech that Stephen Kennedy, who's now taken over the Prime Minister's department, gave after the election, and he basically said our margin for error has shrunk as a country. And I think that's something we all have to take account of, that we sort of know what goods look like, and we haven't got the luxury of sort of fourth best, fifth best that we perhaps had during the China boom.
I think John said it well in terms of the need to double down on our strengths, and we're seeing, certainly in our client base internationally, that clients absolutely are looking at Australia as a very attractive destination in certain areas. So, for example, in bond markets, while there is volatility in US Treasury, as there is concern about the US deficit, the Australian government's bond program is getting a lot of demand. We did a deal for the AOFM yesterday, their 2036 issuance, which was multiple times oversubscribed, one of the biggest order books they've ever had. Very successful transaction, partly because global investors are at the margins deploying more investment into Australian capital markets. So that sort of continued investment in our consistency, reliability, coupled with the focus on productivity and investment in those areas which are critical for economic resilience, I think will just increase that trend of global investors and global companies seeing Australia as a relatively attractive place to invest, and even more so in an increasingly volatile and uncertain world.
So as we come to the end and think about, I guess, a takeaway for the room across the three of you, if we bring together everything we've spoken about today, one of the challenges we often hear at McKinsey from management teams and boards is how you translate greater awareness around these issues of geopolitics, volatility, trade conflict into a so what for organisations. If you could think of one or two things that financial institutions should be doing to build more resilience and also to grab opportunity in this era, what would it be? And John, obviously take that from a government perspective and what we could do on the government side as well, if you wish.
Look, I'll start with critical minerals because it gets a lot of attention. I don't think that's ever going to replace iron ore or gas or coal, but it does give us, the Japanese have this concept of strategic indispensability around their economic security framework. We have to find those parts of our economy that only we can sort of do in quite that way. That's one area. I mean, but, there'll be areas in tech, in even defence industry perhaps, that, we've sort of, if we're the best in a particular area, I mean, partly what's happening with this economic security narrative is there's this whole rise of what are the choke points in the global economy and who controls those choke points. Now, we're not a great power. We're not going to control the sort of financial choke point or a manufacturing choke point, but there'll be parts of that where Australia has particular skills, particular assets, and that will be, I think, part of how we also insulate ourselves from the sort of coercive pressure from wherever it comes, because it can come from, we know, more than one place. How do we insulate ourselves from coercive pressure? It's developing those areas of strategic indispensability that are, if I'm thinking that, I'm thinking Australia.
So from a banking viewpoint and from HSBC's viewpoint, it would be support through both capital and knowledge capital. I think it's very simple. So for instance, the forthcoming launch of our venture debt program, what can we do to help companies that are pre-profit or pre-revenue even launch and stay in Australia and benefit from the hotbed of innovation that occurs in our universities and the likes, and try and keep those strategic interests domestic and finance them. The second thing is when they do need to go overseas, then sharing that knowledge capital based upon the fact that we haven't been there 208 years, but we've been there for both ends of that corridor for a bit of time. I think that's our responsibility, and certainly that's our opportunity.
Yeah, and similarly, we're obviously very focused on supporting our clients with capital into those key thematics where we need investment to support national resiliency. But in parallel with that, also obviously we're investing a lot in our own resilience around tech, data, AI, cybersecurity, to make sure that we absolutely are protecting our clients and then also sharing those insights with our clients as they are also having to invest in those areas. So that sort of focus on cybersecurity, but also the opportunity from data and AI is something which has been an increasing focus and will continue to be, alongside supporting our clients, investing into housing, defence, energy security, agriculture, and their own investments in data and AI.
Thanks, Nell, and thank you all. I mean, if I pick maybe that final theme I hear from all of you and translate it, it's one of the important things for Australia in building resilience is better conversations, whether it's between business and government, whether it's sharing lessons between clients and banks or between different parts of industry. That's going to be important in how we double down on our strengths. So thank you all, and thank you for joining us today.
Thank you.